Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. And on today's episode, you know I'm on Twitter, Master P. I believe the Twitter handle is at OptGuru, so you can easily find him there. And I'm going to let you give yourself a brief introduction. Go for it.
Sure, no problem. So, Master P here. You guys get to finally hear my voice, so very excited for that. I want to thank Dave for inviting me over to have this wonderful conversation. This is my first ever podcast, so really excited as well. So, let me give a quick introduction about myself. You guys have probably seen from my post, I am in my late 40s. I've been working in finance and tech. Nothing too crazy on the finance side. I wasn't like a Goldman Sachs, guru or whatever, making tons of money for them or anything. In my earlier career, I did work at one of the Canadian banks, and I'll get into that. And then I later switched over my field into tech when I graduated from university and and then been investing since about 16 years old, ever since I started working. So the legal age in Canada, I am from Canada, and the legal age in Canada, I think in the US as well, is 16 to work. So I've been working since 16 in finance, and then later in 2000 changed my career over to tech, and then moved here down to the US in the early 2000s. Started with mutual
Awesome.
funds. Back in the day, no internet, no Google, no YouTube. Word
Yeah.
of mouth was the thing. I was fortunate enough to work in the finance industry as a customer service rep at one of the large Canadian banks, and it was an eye opener for me during the quiet times when we were not serving customers. I spent a lot of time with some of the higher ups that were had their own little private office in the back. They were either mortgage brokers or mutual fund rep, investment advisors. So talking with them got this interest started in the finance world. So I'm very thankful for that opportunity and got to learn a lot from there.
Awesome. Yeah, so great introduction. Before we get into it, I do just want to say for any viewers or listeners that would like to support the Passive Income Podcast, I now have a buy me a coffee link in the description below. So basically, for the price of a coffee, you can just make a small donation and it would really help the Passive Income Podcast. And I would really appreciate that. So you can look for that link in the description below. And let's get into it. I first want to talk about a tweet I saw from you yesterday, and I didn't realize that you are Canadian or dual citizenship now. I saw your tweet about dividends you received from a couple of the Canadian banks. If I'm not mistaken, was it CIBC and Bank of Nova Scotia?
Correct? Yes.
Yeah,
So
so go ahead.
yeah, no. I finally got to get back into the Canadian banks. Following Dividend John and his exposure to the banks and listening to him on this podcast kind of been an eye opener for me. Um, as I mentioned, I used to work at one of the large banks. I'll give the name. I'm not afraid to say the name. I worked at the TD
Okay.
Bank as a customer service rep at one of their branches in Toronto, and so it was the best time of my life. I was 16. I worked there till I was like about 24. Kind of doing the same thing.
Wow.
And working part time, full time in the summers while going through school and trying to get my computer science information technology degree from Ryerson University. So a little bit more about me as well.
Yeah.
And yeah, so I used to be an investor when I was in Toronto. I investing in RRSP, putting money away at that time, and used to go into mutual funds back then. Didn't know too much about the stock, so I'm sure they were holding some of the Canadian banks as those funds were holding the Canadian banks along with the other great companies.
Yep.
So yeah, and then our family was immigrated to Canada, and dad and mom worked various jobs, and they finally found a very good financial advisor. And then with my knowledge from talking to these other guys, we kind of had a family discussion, and it was an eye opener for all of us. And you got to remember back then, like I'm talking about 94, right? 1993, 94.
I remember
you know
those years very well. Yeah.
mutual funds were kind of like becoming mainstream, or just probably getting started. Not even the full hype of mutual funds. And we we met a good financial advisor, kind of showed us the projections, showed us the history, and we started investing in it. And as our financial knowledge grew, we ventured out into individual stocks. And I don't know if you remember, I may get the year wrong, forgive me on that. But while working at TD, I realized that these Canadian banks were pretty solid, because one of the investment advisors that was working there, I was talking to him. He said, "Hey, these guys are just, all the Canadian banks. There's no foreign competition that can come in. I don't know if that those rules have changed um, now, being out of the country for so long, right? But at that point, in around 94, 95, banks were solid. Real estate was strong. um, you know, and the fact that um, it was heavily regulated by the government, so you couldn't have, some of the what we didn't know, but in 2008, what we saw with the U.S. banks, some of the fudging of the numbers, or the bad loans, or all this stuff that led to the housing crisis, and the bubble burst in 2008 that took the whole economy down, right? Some of
Yep.
that couldn't happen in Canada because it was highly regulated by the government. Not only the banks do their own internal audits and then external auditors, but then the government also regulated them heavily as well. So they couldn't make all these bad loans, right? You couldn't work, no offense to anybody, but you couldn't work like minimum wage and buy, like $1 million home, right? What
Right.
some of the stuff was happening in 2008 here with the US banks. So back then, working there, having the insights, talking to these guys, I got my parents to go into investing in a few Canadian banks. And we had at the time about anywhere from 500 to 1,000 shares of three or four of the major banks. Of course, my parents' money. I didn't have that kind of funds back then.
Yeah.
And I helped them diversify and invest. But what had happened was, right around that time was the tech boom, right? So everybody's investing in tech. And one of the popular darlings of the TSE at that point was Nortel.
Yep.
And as a family, we were watching these bank stocks, and they're hardly moving, right? Like 5 cents or 10 cents. And then you see the ticker go by for Nortel, and Nortel's up like $5,
Yeah.
$10, $7, right? Every day, right? You see this for 6 months nonstop, right? And in the middle of all that, the other thing that had happened was, I still remember, I was going to school. My dad was dropping me off. It's a long drive from the suburbs to downtown where I went to school. And on the radio, I still remember 680 news AM.
Yep.
Um, on the news, they have every 15 minutes or whatever, they give a market update. And just before the morning bell opening, they announced that the Canadian banks wanted to merge. So I think, like, TD bought out Canada Trust, and there were talks of like CIBC buying another smaller bank, or National Bank, and Bank of Nova Scotia merging with, I may get it wrong, but I think like Royal Bank or Bank of Montreal, like they all wanted to merge. And the bank stocks, just they were up like $10 a share,
Yeah.
$15 a share, like right at the open, right? Like it was just madness. And I'm just, Dad, we have so many shares. Like this is amazing. This is whatever, right? But back then you didn't have the phone to trade on. You couldn't make a decision. You couldn't sell a position. You couldn't see what the real quotes were. You just hearing on the news what's happening. But as the day fizzled, I'm in school, the trading day fizzled, and some of these market analysts came out saying they won't let this happen.
Yep.
Consumers are going to get messed over with, right? There'll be no competition left, and then the Canadian banks could make even more money, and with no competition, so regulators won't allow that to happen. And then at the end of the day, I think they closed negative, right? And they closed negative a lot, right? So,
Yeah.
and then back to my previous conversation, so the banks went down that much, and then you know next day you watch these high tech flyer stocks, right? WorldCom, Nortel, Cisco's back then is going up $4, $5 a share every day. So my parents like, why are we in these stupid bank stocks? They're hardly doing anything. They give like very little dividends. Back then was like, not as much as the growth that they had throughout these years.
Yep.
And my mom's like, and my dad, my parents together, they're like, this thing's going up 5 cents and down 10 cents, while Nortel's moving up $15 a day. Why are we in this? Let's sell everything. So when we kind of broke even in the banks, we sold all of it, and unfortunately went into those high tech flying stocks. It like late 1999, mid probably early 2000. You
A
can
little bit of
essentially say,
FOMO.
yeah, a little bit of FOMO. I think a lot of FOMO because it's been
Yeah.
building up for like 6 9 months. We're just watching these tickers go by, and I think it was just maybe a month or two before the dot com bubble burst, right? And then some of the U.S. listeners might not know about it, but Nortel went under. It kind of like reported a couple of bad earnings, quarter to quarter, and the bubble burst, and everything went downhill from there. Then it got delisted. It's kind of the equivalent on the U.S. side with Lucent, if people remember that name, long time ago, with WorldCom as well. So all that hype around those stocks, the bubble burst, and everything went to zero. So, I should have learned my lesson back then. But being so young, I said, hey, maybe there'll be another opportunity and whatnot. So, lately, you probably saw my reason why I'm shifting in my later years over to dividends, just for that safety,
Yeah.
known income coming in. So now you see me buying these banks. I talk to my wife right now, and I tell her, just imagine where we would be, because in 1994, 1995, we were holding, as a family, we were holding, 1,000 shares,
Wow.
500 shares of, CIBC and Bank of Montreal and TD and Bank of Nova Scotia. And, I said, imagine those dividends reinvesting for like
For the
30,
last 25
35.
years.
Yeah, right, exactly. And and the growth that they've had, I said, I don't know where we'll be right now. I think I would probably match dividend John or be higher than him on the dividend payouts for the Canadian bank. So lessons learned,
Yeah.
gotta get smarter and whatever. And then so now focusing more on the solid dividend growth, and this dividend community that we have on Twitter, just been so supportive, in terms of sharing the knowledge, sharing the tickers, why we should be in this. And the other thing is doing for me, Dave, that you probably, I think others might see it too, is it builds confidence, right? You
Yeah.
see other people doing it. You see that they're successful, right? Like, we see the post from like Dream or Sandstone, right? Posting their dividend, they are somewhat semi-retired or
Yeah.
retired, right? You
Dividend
see,
Daddy as well just posted a January one for, I think, 7,500. It's like, that's inspirational. And all of these people aren't like posting it to be, brag. Like they're
right.
not bragging. They're just basically saying, listen, if I can do it, you can too. Right.
Exactly. Yeah, that's the way I'm taking it. And before I had a fear, I try not to build a big position, right, on these dividend stocks. But now I see, like, the Dream sharing her portfolio in the review, and she owns like X thousand amount of shares of, whatever solid company, right?
Yeah.
And I'm thinking, like, why am I worried with only like 300 shares? Like, why am I sweating at night, right? Like, so what, it goes down. They've been paying dividends for the last 60 years. They're a
Oh, the
solid
banks have been
company.
paying for nearly 200 years. The
Yeah,
Canadian
yeah,
banks.
yeah. The Canadian banks also, right? So I see Dividend John posting, the picture of like horses in front of the branch, right?
Yeah.
And
Horse and
saying, been
buggy. Those are great
paying,
pictures he
yeah,
finds.
yeah. So paying dividends since like 18 whatever, right? 1800s, and I'm like, why am I sweating like, to build up these positions? So slowly I'm adding, and is watching people in front of me post and share their experience is allowing me to grow as well, and hopefully I can help others, say, hey, if he's able to do it, then I can do it too, right?
Yeah.
So it's a great community, and it's been very wonderful for me. I'm very blessed I found it. So
Yeah,
um
I'm, myself as well, very happy to be part of that community, and like you said, very supportive of each other and helping share knowledge and information, and everybody is truly there to help each other. It's not, it's not a competition. It's everybody's just trying to help everybody succeed and win. So it's a
right
great community.
now, some of the listeners might be saying, hey, this guy has like 30 plus years of experience, and he, why in the middle is he still getting scared and whatnot, right? So now I'm not, I'm learning to rewire my brain to be the exact opposite, right? I've been through multiple crashes. and each of those crashes,
Yeah.
I chickened out, sold at the wrong time, and in fact, I should have been doing the exact opposite. And I've it's just been this COVID crash was the only one that I didn't sell, and I started accumulating more. And of course, in 2022, the market drawdown, you see me constantly every day buying, something, or rather, I'm in so many different sectors that something's taking a hit, right? And I'm trying to put my dollar bills to work, let them work for me. I listened
Yep.
to one of your podcasts where you said turn that cash register around. That has been my I'm saying that to my kids. I say that every day to my wife, and they're getting sick and tired of me saying this, but I'm saying we have to do this. This is the only way to survive, right? Like, we are giving them money. Why don't they give us some of the money back to us, right? Your
Yeah.
electric company, the water company, you go shopping at Costco, Walmart, etc., right? Like, that's all there. We drink coffee at Starbucks. Let's get some of that money back. Let's turn that cash register around.
Well, I'm glad you're using that line. People on Twitter are giving me credit for it, but honestly, someone else did say it. I heard it from someone else, but people are like, "Well, I
Right.
heard it from you, so I'm giving you credit for it." I'm
Yeah.
like, "But
Yeah.
I really didn't say it first." But anyways, yes, turn that cash register around, and the same thing. Here in Ontario, it's Hydro One. I've started a position in that, like you mentioned, the electricity bill. Bell
Right.
Canada is my cell phone provider, so I want them to pay me to pay them. Bank of Nova Scotia is holds the mortgage on my house. So, again, I'm just dollar cost averaging into those positions, and yeah, trying to turn that cash register around.
Right, perfect. So yeah, this industry's been great to me. So I do work in tech, but I've always had a love of finance and trying to ways for different hacks. So I told you, we learned about the mutual funds, and
Yep.
I'll share a real quick story. I don't think it still applies anymore, but we were with Canada Trust, and what had happened was there were like no load mutual funds, so there's no penalties for taking it out, or no expenses, etc. And we noticed that there was some correlation between the US market and the Asian markets. And with the time zone difference, we were able to take some sort of advantage to that. So for example, if our markets were strong, if the US markets were strong, but we know previous day the Asian markets were weak, you can get in the next day into an Asian mutual fund, like the Hong Kong, the Hang Seng mutual fund, or the Nikkei, the Japanese mutual funds, right, that own all the Japanese company.
Yep.
You can get their previous day's closing price. So that was like, hey, this is like free money. Imagine, you knowing what the closing price is going to be at 4 o'clock, and you're trading at 9 o'clock in the morning, in 9:30 when the market's open.
Right.
Then you're like, hey, I can take advantage of this because I know what the closing price will be, right? So, what we, and especially if the US markets were strong and the previous night the Asian markets were weak, we would move funds from the US mutual funds over to the Asian markets, because we know that the Asian markets will now rally because the US and the Canadian markets, the North American markets, rallied.
Right.
So that, right. So then when we wake up in the morning, we see Hang Seng and Nikkei were up so much, and we would then liquidate our funds, or we decide to keep it in there. If the Dow rallies again for the second day, we know it's going to rally again. But if, like, say, we know the Dow went down today, then we would just say before the closing bell, we would just transfer all the mutual funds from the Nikkei, the Japanese mutual funds, over back into cash. And
Interesting. A couple of questions there. The European markets are in sort of in between there. Were you playing the European markets as well, or just between Asia and North America?
no, just
And
between in Asia and North America, because the time zone windows allowed us to know what the closing is.
right.
Because the European markets are still open while the North American markets are open, so it could go either way. So Europe could be strong, but if the North American markets open up weak, then that'll drag down the U.S. market, so the European market. So you wouldn't know which way it was going to go.
Another question to that is how did you do this in the '90s? We didn't have, like you stated previously, we didn't have the internet or Google or YouTube or, we
We
didn't have apps
carry,
on our phones.
right. So I had with me in, well, both. I had with me in my wallet, just a piece of paper with like a 16-digit account number, with Canada Trust back then. I don't think they exist still. I may be wrong, or they got bought out. But we used to call the 1-800 number, which was especially for the mutual funds desk at
Okay.
Canada Trust, literally 10 minutes or 5 minutes before the closing bell in the US, North American markets, and we would tell them what to do at that point, and they would just move the funds over. So I think a lot of people were doing this because at one time, about a year and a half of doing this, and clearly it's like, you're not cheating, but it's clearly an advantage. But it was a headache for the mutual fund manager, because as people learned this trick, now if you're a mutual fund manager, you have to invest or sell securities based on what your prospectus says, how much cash you should keep, how much you should be invested. Now imagine hundreds of millions coming in one day and hundreds of millions coming out the next day, and it's
Right.
very hard for you to manage that. So then about a year of doing this, and it wasn't always a 100% guarantee, right? But you had the probabilities on your side, right?
Yeah,
That you had a little bit of edge, and this 85 to 90% of the time it worked. So those are great odds. I do like those odds,
for sure.
right? Sometimes it doesn't go your way, and then we would wait an extra couple of days, and then when the opportunity arises, come back into the cash account with the bank. But what had happened was, they realized this was happening, and they were getting a lot of calls coming in. So I think the word of mouth back then, you couldn't tweet about it or anything, right?
Right.
So they actually put a limit to that. So saying that if you go in and then you come right back out the next day, they would let you do that, because they can't hold your funds, right? Like, without your permission, and not let you come out of a trade. But then they could prevent you to go back into that trade for another like 60 days or 30 days or whatever it was. So
Right.
once you do that one full trade and you come back into cash, then you have to wait 60 days or whatever before you could enter back in. So then that game kind of disappeared for us. But you mentioned how we did this. So payphones everywhere. The Bell Canada. I saw that tweet somebody posted with the the push buttons and the payphones.
Yeah,
So I
and their
used to
kids asking, "What
always
is that?"
always used to have a roll of quarters on me. I carried my 16-digit account number in my wallet, and I would call them up 10 minutes before the closing bell and just say, "Can you tell me what the Dow is at?" And they would tell me it's up or down or whatever, because you couldn't get real time quotes on a cell phone back then.
Right.
And they would say, "Hey, Dow's up," or Dow's down 200 as an example, right? And I'm like, "Oh my God, we're in the Asian fund, so let's transfer everything because Asia is going to crash." So I would just tell the agent, "Can you please transfer everything out of my Asian mutual fund and put it back into cash?" So then they would do the transaction for us. And the key was around 5 to 10 minutes before the closing bell, so you knew exactly how, somewhat know with a high probability how the markets will close on the North American side.
That's very interesting.
Yeah,
Going back to your point about bank mergers, I'd forgotten even about Canada Trust. So they did it for a long time. They were called TD Canada Trust, and obviously since then, TD has phased out that brand name or brand of TD Canada
right,
Trust, and so yeah, they're just completely gone now.
right. So then, so that was one of the adventures, and then I got into options, and back then I was buying options and losing a lot of money and whatnot. Then a family friend taught us, why are you buying it when you can sell options, and taught me how that works and whatnot, right?
Hmm.
And you still got to remember, it's all word of mouth, and I was fortunate enough to have that family friend. He did make us a lot of money, but the point was that you had to like do it to get the experience and then learn from it, right? So when you start losing money and you realize what's happening, you understand the mechanisms of how options work real quick.
Yeah,
And then right, so I mean, anything you do, right? If when you're learning to ride a bike, when you fall down, you kind of know, hey, I shouldn't have leaned this way or that way, that caused me to fall down, so I'm going to try to stay straight and try to balance myself, right?
yeah.
Same thing here with options. So learning that helped a lot. But these crashes along the way, and being involved in some of this stuff kind of scared me, right? So the 1997 crash, I still remember being in university, and pages. If you remember the pagers back then, that
Yeah.
were numeric, and our financial advisor calling, or I think my dad was trying to reach me, and I call him. He said, "Hey, that was been halted like 3 times today, right?" And I'm like, "What?" Like, that can't be good, right? Halts are never good if the Dow is being halted 3 times in a day.
Yeah, generally not.
Generally not. So 97, the 2000, the 2008s, all the wrong moves. We liquidated at the bottom, and then when the markets recovered, we said, "Hey, everything's looking good now, so let's go back in." And often we would go back in at a way higher price than what we sold for. And when you do this 2 to 3 times, you're like, "I think I'm on the wrong side of the trade. I think I should be on the other side of the trade." Like,
Yeah,
when
definitely.
crashes happen, you should be going into the market, right? and
Yeah.
and as huge rallies occur, and that they're kind of getting overextended, then those might be the time where you want to trim a little bit, right? So that is why one of this, I learned this RSI about 2 years ago, and I've been kind of using that to guide me, right? So people
Yeah.
mistake, I get some nasty grams like, "Oh, you're building position, but why are you trimming?" Right? um, so I'm like, just it's just my risk tolerance, right? Like, I want to hold these stocks forever. I want to accumulate 1,000 shares, 2,000 shares, Bell Canada, the banks, whatever it may be. But
Yeah.
along the way, if it's overbought, right? Like, I don't know the price of, like, say, TD, but say TD was 50 as I was buying it in the dips, and within 3 weeks is now trading at 85, right? Like, common sense tells you, like, it's not going to go to 150. It may it may in 5 years, right? But
Right.
along the way, you're going to get these bumps, and if RSI is showing 75, 80 on the very extended side, and it's been overbought in the short term for, like, no good reason, or just had, like, really good earnings, but it doesn't justify like a 20 $25 move in like 2 weeks, then common sense says, I still want to be part of it, but I want to trim a little bit and
Take
take
some
those
profit.
funds, take the profit, free up some cash, and then now look for maybe some other tech sector, like maybe Microsoft is getting hit, right, in the tech
Mhm.
side, and Microsoft's RSI is maybe 26 or 25, which shows that it's oversold, right? So maybe take some of that gains off and then go into Microsoft. I want to hold both companies for 50 years or longer, right?
Mhm.
So, right. So I guess in that, I do get the nasty guys. "Oh, why are you selling? This is a very solid company. You say you want to build a position, but then I see you wanted to sell." Well, this is why I'm just using risk management. And then somebody's like, "Well, you can't, like, everybody knows the line, time, what is it, time in the market is greater than timing the market," right?
Yeah.
Which I totally understand, Warren Buffett's quote, and long-term mentality, and this going in and out, right? But I'm not going in and out as a day trader. I'm going in and out, after holding a position for 2 3 months, and if some overbought occurs, then I do trim, and I'm trimming like 5%, 10% at max. So I'm still holding 90% of my position on that particular stock that might be overbought, right? But just use those funds. And then somebody's like, "Well, how much are you really making on that?" Right? I can't quantify that, because I mean, you take your gains and then say you put it like in Income Realty, right? Or you
Yep.
put it into Microsoft. That's basically free money that you got, and now you're investing in Microsoft for the long run, or JEPI to get that monthly income. How do you calculate the return on that? I mean, it's just unlimited, right? Because,
Yeah.
right, like, if you found a free $100, and you put that into Income Realty, right? Like, what is your return on that? It's just infinite, because Income Realty will keep paying you, and it was a free $100 to you, and you just keep making that money on that dividend that Income Realty pays out.
Overall, what does your portfolio look like, Canadian companies versus US companies? Are you like 50-50 or heavier into one country or the other?
Yeah. So when I did leave the Canada to go to the US, I did have an RRSP, and so I'll be honest, I had probably 60 $50 $60,000 worth, now. So I think back then it was like just 30 35,000, and it grew to being 60 65,000 or so. So I've just kept that there, and then on the US side, my investment, so it's still in the US brokerage firms, and I put as much as I can in my retirement account in the U.S. so that I don't have to pay the tax on a foreign position. When the dividends come in, right?
Right.
So I do try to hold as much of that in my retirement account, and that is about I got like six or seven companies in Bridge. The majority of the banks, AQN, which everybody's been talking about. So I'm a holder. I'm just wait and see on that. Let's see how it pans out.
Yep.
But I think the worst is behind it because I think it has rallied the last week and a half. So it's been holding its own. So very fortunate with that. If they do get one or two earnings kind of stabilized, and I feel like that they're back on track again, then I'll start adding more to it. My goal is still to get to 200 to 300 shares of that company. My feeling is that if they still continue being bad, then I think you know they might get bought out, right? So
Yeah.
that is my thinking and my hope, right? I know hoping and investing don't go together, but but I've been involved with companies that go through this and they have recovered, and it might be a short term thing. Maybe management is understanding what's happening and are realizing. And I think as rates stop going up and they kind of normalize, then I think it'll be to their benefit, because I think that increase in rates kind of hurt them on their debt, and that's how they got into trouble. Just like everybody else probably thinking that these lower rates are here to stay. We can get 1% mortgages and be happy forever.
Right. So interesting. So those are the Canadian companies, Enbridge, AQN, the Canadian banks, and I'm guessing you uh, are holding them through, like, or you bought them through the New York Stock Exchange in U.S.
Yes,
dollars, holding them in your U.S. account. Uh,
correct.
and then, so just for comparison, what U.S. companies do you have in your portfolio as well?
So I got all the good ones, right? I think you guys see me, and I'm actually thinking about maybe doing like a monthly or a weekly podcast, depending on the time. The family keeps me busy. My kids are still young, so I'm pretty active family with them. But as they grow up and mature, and I get more time, or maybe in my retirement. But all the solid dividend companies, the Johnson and Johnson, Pfizer's, Gilead. AbbVie on the drug side, and then
Yeah,
we got on the tech side that I used to venture on all these crazy tech stocks. I don't do that anymore. The Palantirs, the Pelotons, and all this. I don't. I'm out of all of that. Just solid tech companies that make money day in and day
Microsoft
out.
and Apple.
Microsoft, Apple, right? Those are the primary ones. Of course, I hold a lot of Intel. You probably see me post on that as well.
Yeah,
Uh, I grew up with Intel. Being in tech in the '90s. Even earlier '90s in school. All of the PCs. Every time I opened them up, they had an Intel chip in it. So Intel's very near and dear to my heart. I know they're going through a struggle. I think every company does, but eventually they'll figure it out.
yeah.
And the U.S. government and this divesting from the Asian manufacturing side and bringing a lot of the stuff back into Europe and the Americans to help with the supply chain. I think in the long run, this will be good, especially if they get their technical leadership back. They know how to do it. It's just a couple of managements in the middle that were wrong. You know, Probably had not the technical background but the business background, so they're playing, that shell game with the numbers, right? Let's buy back shares to make, prop up the stock, or let's move this around and let's move this funds around. Let's buy other companies, maybe they'll help it, but not really focusing on their chip design and where their bread and butter is, right? So I think that mentality's changed. They realize that we can't keep doing these accounting tricks, right? I always talk about,
Mhm.
when companies going through a hard time, they do layoffs, they do this, they do that, and I kind of equate that to like an individual person, right? Like if you get laid off, immediately what you will do is, I'm going to cut my expenses, right? Which is an equivalent for a company, maybe cutting some headcount, right? Shutting some divisions that are not making money for them, right? But eventually you're going to say, all right, I did what I can, but there's no cash flow coming in. I need to get cash flow coming in. Now, how do I do that, right? So you either have to learn a new skill, right? You have to go into something new, or if your industry is still very good at and what you're doing good at, but it's just unfortunate that your company decided to lay you off. Then you're like, you know what, I'm gonna scrub up my resume. I'm gonna maybe take one or two classes to advance my knowledge in the field that I'm an expert in, and I'm gonna start, putting out resumes. And then once I get hired and that money starts coming in, then the expenses sort of take care of themselves, right? You don't need to worry. So same thing here, I think with Intel. They did a lot of the cost cutting and savings and whatnot, but they got to get back to their bread and butter. Essentially they have to go out and get a job. Like it for them means they have to go and redesign their chips, take their technical leadership back, be strong in manufacturing. This is what they do, right? This is their bread
Yeah,
and butter, right? They're not like focusing on web hosting and this. And I know they don't do that anymore, but it's just an example, right? When web hosting used to be a huge deal, but everybody knows that's kind of like a business that doesn't make sense anymore, right? So
right.
if you're a bread and butter manufacturing company, and especially in the chip design space, then you need to get back to that and focus on your technical leadership. And I think they're doing all the right steps with all this investments that they're doing with the U.S. government backing them up. And and they got a strong guy in there right now. If people don't know, he used to be the original designer of the 386 back then and the 486. So he's very technical. He knows what he's doing. So I think you know it'll be a couple of quarters. You can't turn the Titanic around in like 2 minutes. It will take time to turn the Titanic around.
Yeah,
But yeah, hopefully it
but
doesn't
they're going to
sink though,
avoid
right?
hitting the iceberg, is what you're
Exactly.
saying.
Yes, yeah. Hopefully they don't sink and hit the iceberg, right? So, so every company goes through that same thing here with some of these utility companies that we're experiencing, right, in Canada. So, but that's fine. Things happen, and good companies will survive.
Yeah, and I think Algonquin Power will survive as well. And I think, you know, obviously we all saw that dividend cut coming. The writing was on the wall. And I
Right.
think now that it's behind us, it's just a matter of being able to look forward is my
Exactly.
hope.
Yeah. So this dividend cut, right? So I'm trying to shift my portfolio more over to dividends so that I'm more hands off in my later years of life. I don't want to be sitting in front of a screen looking at every tick.
Yeah.
And this dividend mentality really helps, right? But just as you mentioned, if you're not in solid companies, right, then you may get that dividend cut, right? Or they may be solid companies, but like Intel, you may be going through a bad period until you get your leadership back, right? So
Hmm.
um, I'm not saying Intel's going to cut their dividend or not cut their dividend. I have no idea on that, right? But what I'm saying is, it could be Pepsi, right? Everybody in the world might decide we don't want to drink sugary drinks anymore, and it's bad for you, right? So their volume will go down, and maybe they experience something, but they will come back. They'll invest more in water and energy drinks that are healthier and less sugary, or whatever the case may be, right? And then get
Yeah.
that dividend back. So that is one of the things of my concern. So that is why I still keep that options trading on the side to generate a little bit of the side incomes from options. But trying to shift over to these more solid companies that pay dividend, 60 plus years, 40 plus years, and just keep adding more shares, accumulating shares, especially on the low RSI. And the hardest part of this investing is just sitting. I'm normally a lazy guy. I'll be the first to admit it. I hate to do work. So this dividend investing is working out very nicely for me. But sitting and just waiting 2 3 years, 5 years for that snowball to build and get bigger, it is the hardest part. And I'm learning in
For
my
sure.
later years to just step away from the keyboard. No need to watch every tick. Just enjoy life. Everything will be fine. Your dividends will come in. Yes, one or two will have cuts, but your
But a
option
lot of them will
income,
have growth as well, right? So,
a lot of them will have growth as well, right? So, and they will supplement your expenses in retirement, and you have a little bit of options trading to kind of, if they do get cut, some of those option trading income will help you as well to along the way. So yeah, some of the other companies, real quick, in the US, Visa, I mentioned, Pepsi, Coke, all, all the major ones. I think everybody knows. I'm not going to go through the whole list, but yeah, all of them.
right. You've probably seen my tweet or heard me say. Basically, exactly to your point, is I love it when companies pay me to not work for them.
Exactly. That is my favorite saying as well. I really love that saying. You know, another guy that I listened to, right? He just basically one of his videos, which was an eye opener for me, because he invests in this other company. It's like a mortgage backed company, yeah, but it's paying like 11% in dividend, right? And one day he does his podcast and he just shows $2,000, right? It's just liquid cash and he's counting it, right? And you hear the sound of money being counted. And he said, these guys pay me every 3 months $2,000. And he just counted that. And that was like, we miss that because we don't touch the physical cash. We just see the direct deposit happen into the account.
Hmm.
So we don't get that physical touch, the feeling, what does that feel like? But you know that just brought me back to reality. Is like, hey, that is real money that I'm getting from these dividends, right?
Right.
And I've mentioned many times, I try to talk to previously when I was in school, to other people about investing and whatever, and this guy's crazy, right? And then in my work career, try to talk to a few people about money, like, hey, where are you investing? Or but that seems to be like a very personal topic to somebody, or they don't want to talk to you about it, or they don't want to share their experiences with you about it. And this is why this Twitter community is just very very
Phenomenal.
open, and sharing their journey. You see a lot of people like I'm doing. I'm just trading, sharing my trading journey, sharing my dividend journey, coming on podcasts like you have various guests that came out and shared.
Yeah.
The Dream does her portfolio review every so often, says this much position, I got this much dividend, this is how much I grew quarter by quarter, year by year, right? Shows you the nice growth graph. So that's, I wish I had that when I was starting in the 90s. God knows where I would be right now. I think I would be like at $50 million.
Yeah, I've had quite a few younger guests on, and I mean, they don't know the struggles we went through in the '90s, right? Like for them, this is all all they've known is okay. The internet's right there. It's handy. It's convenient. I have this app on my phone, whether it's
Right,
Wealthsimple in Canada or Robinhood in the US or whatever app you're using,
right,
Quest Trade, whatever, for either zero commission or no commission. See, there was another big thing back in the day too, is how much you had to pay in commissions when online banking first started, and you were trying to buy
right.
uh, shares through your bank, and the commissions were like $10 a trade, and it's like, well, how do I even make this worthwhile? But now these
Even
like,
more, even
yeah,
more,
so
Dave. Like when I started, I'm sorry to interrupt, but that is what focus was on mutual funds at the time, because there was no, especially the no load mutual funds that I talked about.
yeah,
So there was no commissions, right? But you know, I still remember placing my first trade for a stock. No computer. You had to call it in. You had to ask the guy, what is the high of the day so far? What is the low of the day? You don't have charts, right? People
yeah,
also, I couldn't go back and look at a 1 year chart or a 3 year chart or a 1 minute chart. All of that stuff was non existent.
right,
I had to call the guy and he would have to read the numbers. Okay, day high was this, day low was this, last week, roughly was this. And, you had to make a decision at that point. And when you tell him, I want to buy, you know, 50 shares or 100 shares, right? It was because you had to call him to make that trade for you. It was $50 commission to buy.
right,
And then when you wanted to sell, it's another $50. And you had to wait, like sometimes you call and you have to wait 10 minutes for a representative to come back to you. You get the message, thank you for calling, blah blah blah, a
yeah,
representative will be with you shortly, and you wait 10. Now you tell me nowadays what happens, 10, 15 minutes in the market. Like you might think things are going really good. By the time you got that agent on the phone, your stock could be down $2 from where you wanted to sell it. So
yeah,
it was very difficult. Then the commissions came down. Then they introduced online trading, and you had to download a software. It wasn't even a website. And then if you placed it through their software online, then you got it 29.99.
yeah.
Then it
I
came,
remember 29.99 in the early days of online
right. So
trading, online
yeah.
banking.
So even back then, you had to make $60 a trade. You be up $60, and if you sell it, you're break even, right?
Yeah,
And then back then, you had to take a lot of risk, because you're like, if I buy one share, I'm still paying 29.99 to buy it and
yeah,
29.99 to sell it, right? So that one stock has to move up $60 before I break even if I'm just buying one share, right?
Yeah.
There's no such thing as fractional shares. That was unheard of. And if you remember, they were trading in fractions back then, right? Like 29 and one third, right? 20, 29 and 18 30 32nd, right? So you had to do that of fractional conversion in your mind as well, like to what it is. And then they moved to the decimals. So a lot of complications back then. You had to walk around. I was walking around before even cell phones, walking around with like minimum at least a roll of quarters on me at all times, in case I was away from a phone and I had to make a phone call, right? And then then it went to 9.99, then eventually 4.99. Then I think Robinhood changed the game when they first came on, and especially in the US when they made it commission free.
Yeah.
But their customer service was horrible, right? So you couldn't get anybody on the phone immediately. It had to be via leave them an email or whatever it may be. But it was just purely online, zero commissions, and then you could do and then fractional shares was a big deal as well. It's like Lockheed Martin, right? Like I don't know the exact price for it, like $400 or $500 a share, whatever it may be, right?
Yeah.
I don't need $500 to invest in Lockheed Martin right now, one share, right? Now I can put $5 into Lockheed Martin if I wanted to. In the US with Fidelity and some of these other brokerage firms, even if I have a dollar lying around, I can put a dollar towards Pepsi, $1 towards Lockheed Martin, even though it's a $500 plus stock.
Yeah.
And I think with zero commissions, like, yeah. And people like, oh, they're like front running your order, and all these algos are, and they're making money off of you. Let them make 0.0001 cent off of my $5 that I'm putting in. I'm still winning because I'm not paying $50 a trade anymore.
Yeah, no, I agree 100%. So yeah, I definitely remember those days of the 29.95s and the 9.95s, and I think some of them through the big 6 banks are probably still at that 9.95 trade, and it's absolutely crazy to me why anybody would still be doing that when, like I said, you can get, either these low fees on Quest Trade. I think is Scott Trade still a thing, and some of the others, or like I
Right.
said, Wealthsimple here in Canada and Robinhood in the US where it's like 0 commission. Like why pay commission at all in 2023, right?
Exactly. And you got the information right at your fingertips, literally, right? It takes maybe what maximum three buttons that you have to press to make a trade. So, you know, my daughters get tired of me saying this, but I say you're living in an age where information is right there and you can make money literally just like
Just
clicking
by
two
paying
buttons.
attention to what's going
Just
on, right?
just by paying attention, and is it like you have to click three buttons and you can make money. Like what a wonderful era to be alive in, right?
Yeah.
Life
I
is
really
wonderful.
hope some younger listener there's some younger viewers and listeners listening to this and realizing how lucky they are to be able
Right.
to, have these apps on their phone and be able to have accounts set up in no time and all of a sudden be able to buy, like you said, 1/10 of a share of Pepsi or Costco or whatever, right? You
Right.
don't need 60 or $70 to buy a share of Coke. You can have $10 and or 5 like you said. So
Right.
and you can just dollar cost average into that, until you get up to that one full share.
Right. And the other benefit, like you just mentioned, right? Great point on this dollar cost averaging. Say you don't have a lot, you're just starting out, and you can put in $10 a week towards, say, Pepsi as an example, right?
Yeah.
Solid company, everybody eats Lay's and drinks Pepsi, and they got all that, right? You can only dollar cost $10. Now is $0 commission. You can click a button anytime in like 3 seconds. So you may be working in a field where you're nowhere near a computer, or you know don't have access, but right on your phone you can do that. And what a great way to dollar cost average. Like before, if you go back 30, 40 years, right, paying $50, you might be, and you might, you like, your dollar cost average might be like, I have to save enough for like maybe 50 shares or 100 shares, right? So
Yeah.
now you need to save at least, whatever it may be, like $10,000 before that trade is worthwhile. And how long does it take for you to save 10,000 and then to invest that 10,000? Now if it goes against you, you need to build another 10,000 so you could dollar cost average. So that's a long process, right?
Yeah.
Whereas now, you say you just start a brand new position in Pepsi, you put $10 this week, $10 next week. Say in third week, for whatever reason, Pepsi crashes 20%, right? Because of the tailwinds from the markets, or the S&P 500 crashed, or some negative press against Pepsi, whatever it may be, right?
Yeah.
You don't need $10,000 saved up again to dollar cost average. You can just click three buttons. You can put $10 in, and now you're dollar cost averaging on Pepsi when it's 20% lower, right?
Yeah.
I mean, this is wonderful. This is like a dream come true. And I keep telling my kids, like, as soon as you start working, the first thing you need to do, like on your cell phone, is to download your brokerage firm's app and just learn to trade on that. Look at a chart real quick to see where things are at, and just throw $10 into something and just let that grow for you.
Yeah, not even so much trade, just like, buy these solid dividend paying companies and, over the course of the next 20, 30 years, keep dollar cost averaging into like the examples you've given, your Cokes, your Pepsis, your Johnson and Johnsons, and
Correct.
so many of the Canadian ones as well, the Canadian banks and the telecoms and some of the utilities. And you can just, whether it's a fractional share or some of them that are, lower cost and maybe like AT&T, I think is a prime example. It's around $20 a share. So,
Right.
if even when you start working at 16 years old, I'm sure you can find $20 a month to put into something like that. And sure,
Yep.
AT&T has had some problems over the last year, 2 years, but again, going back to talking about companies with dividend cuts and turning the Titanic around before it hits the iceberg, I think maybe AT&T is a prime example of that.
And the other thing about dividend cuts, while you mentioned it, some people see it as negative, and initially the shock comes as negative, right? Like when
Yeah,
AQN cut, right? Algonquin Power cut. Well, there's two sides of it, right? One side gets very scared. Oh my God, I lost income, and they cut dividends by 50% or whatever it was, right? And
or
blah blah blah. Horrible company. I'm gonna dump it. Get out, right? Well, the other side of that equation is, well, looks like management is trying to get a hold of debt, trying to get hold of their obligations. They're trying to control it, and they're locking their expenses down, which is a good thing as well, right? And one of the prime example you can see is Ford, right?
yeah,
Disney's doing it right now. Disney used to pay a dividend, right? The pandemic hit, nobody's going to their parks anymore. They cut their dividend, right? And so I think that's a sign of management controlling, stopping the bleeding, controlling their expenses. And once things turn around, right? Disney's never going to say, well, I'm never going to ever pay dividend in my life ever again for ever the history of this company going forward, right?
right.
But when, you know, say COVID is completely gone, we don't have any more pandemics on this planet anymore. Things are like back to where we were in the good old days before COVID, and their parks are busy again, and they're making money hand over fist again. Management's going to say we have a ton of cash flow coming in, things are looking good, let's reinstate our dividend, and let's keep growing the company, let's continue building more parks, making more movies, off we go, right? So
Yeah,
same thing, Ford did exactly the same thing. If you look, I think Ford hit like $4 or $5 US, if you look at Ford's chart, and during that time, on that huge decline, they cut their dividend, but then they bounced right back, and then they reinstated their dividend, right? So,
yeah,
you know, people are like, oh my God, they cut dividend or they stopped their dividend, and life is, yeah, eventually you're gonna hurt, right? Like if you're counting on that income from Disney, then yeah, obviously you're gonna get hurt a little bit, right? And that is why part of me wants to still keep, like, 10%, 25% active in the options land to kind of compensate for that. So if I was retired and Disney stops their dividend and I'm a big Disney shareholder, I can still continue writing covered calls and cash secure puts against my Disney position to keep generating that income from Disney, which I may have lost from my, dividend from Disney that I used to get. So that is why I still want to keep some option trading going, but I don't want to be just sitting in front of a computer like when I'm 60, 70 years old and
yeah,
looking at every tick and trading. Part of me says, hey, you worked all this your whole life. Why don't you go out and enjoy life, right? Go on a cruise, go on a vacation, go on long drives, enjoy yourself
yeah.
instead
I
of
think
worrying
Ford
about
is
the
a
market.
I think Ford is a great example as well. Hindsight being 2020, buying Ford at $5 a share would have been absolutely brilliant.
Right,
And because a big portion of that too is you look at the number one selling vehicle in North America is the Ford F-150. Not just truck, vehicle, like overall, all vehicles. So cars, trucks, whatever.
right.
The F-150 is the number one selling vehicle, and it has been for years and years and years straight. So,
Yep,
hindsight again, hindsight is always 2020. Yeah,
right.
it
But
would have been buying Ford at $5 a share would have been a great time to
yeah,
do exactly that.
yeah. But when those negative presses come, right, they're cutting dividends or they're stopping dividend, and the
They need
car
a
sales are
government
slowing
bailout.
down. They need a government bailout and blah blah blah. And you know that saying, be greedy when others are fearful and fearful when others are greedy.
Yeah,
That was a prime example with Ford right there, right? At $4, $5 a share, people are thinking, "Oh my God, Ford's going to go under. There'll be no more Ford trucks anymore. Everything's gone. You're not going to see another Ford on this planet ever again. They're gone for good." But here they are. They recovered. Management. And I don't blame them. It's the same thing. Like I just mentioned, if you get laid off right now, you got to say, I'm going to cut all unnecessary expenses, right? I'm going to
yeah,
stop my subscriptions. I'm going to, I don't need to buy $500 worth of groceries every week. I'm going to try to cut it down to, maybe 300. I don't need to buy the name brands. I'm going to go generic, right?
yeah,
Great values, the Kirklands, whatever it may be, right? So same thing here with the company, right? While things are good, they're giving out a good dividend, whatnot. But every company will go through these cycles where they're not great anymore and they experience some sort of hiccup. Now it is their time to, tighten the belt. So, they may look at cutting dividends, they may look at stopping dividends, liquidating some assets, whatever it may be. But eventually, they'll get things together. And if they truly are great companies, they will come back and they will create something that consumers want and that will drive their demand, and everybody wants their product, right? you know we talk about this, but look at Apple, right? If you look at Apple, they didn't take government bailout, but they took bailout from Microsoft. Bill Gates himself, Steve Jobs and Bill Gates met when Apple was trading, way back. It was a high flyer, and then they got rid of Steve Jobs, and they couldn't sell computers anymore, and they weren't innovative, and they came down. And I don't know, folks. I don't remember the absolute rock bottom, but they hit like $2-3 a share. Apple, right? And they bet they got Steve Jobs back. And even when he did come back for another year or two, they kind of struggled, but then they came out with what is it? I forget the music player, their pod,
oh,
right?
the iPod.
The iPod, right? They came out with the iPod, and you take all these albums, put it into your iPod. So that got their growth going. Microsoft, their direct competitor, had to invest in Apple just to keep it alive, so that there won't be more antitrust lawsuits against them and all this. So Bill Gates, Microsoft themselves put in their own money into their competitor to kind of help them stay afloat. And from some of that cash and bringing Steve Jobs back, the iPod was created. Then the first ever iPhone came, and then the rest is history, right?
Yeah,
So I'm pretty sure Apple long time ago paid dividends, but when it hit $2-3 a share, they had to stop dividends. They had to cut this, cut that, restructure, do this, do that. And then one or two great products, right? And you get your leadership back, and then the rest is history again, right? So,
hmm
right. So, I
going
mean,
back to Ford too. Ford is transitioning nicely into the EV market with like an electric Mustang and the Ford
yes,
F-150 Lightning. And so,
yes.
like, they're two most popular. Obviously, a Ford Mustang has had, over, 50, 60 years of tradition, right, as a North American muscle car. And so transitioning that into the EV market, and then same with the F-150 Lightning. I've watched quite a few videos on that truck, and it looks absolutely amazing.
I know coworkers here that own nothing but four trucks, and they will not buy another truck. You
Yeah.
know, they started off with the F-150, and now one guy has a F350 for all the hauling and that he does and whatnot, but
Mhm.
he lives and swears by it. Even if I'm gonna sell my truck, I'm getting another Ford. There's no
Yeah.
ifs, ands, or buts about it. They don't even want to look at another truck. It's just like we're a Toyota family. we will always buy Toyota. Like, our family's been a Toyota family since like the mid '90s, and it's just one car after another. It's just a Toyota.
Yeah. Well, they're a
Like,
solid car company as well, right? So,
yeah, people get set in their ways, right? The Toyotas, the Hondas, the Fords. People have their favorites, and they just same thing with Pepsi and Coke, right? If you're a Coke drinker, you're just gonna keep drinking Coke. You're not gonna be like, oh, let me try this, RC Cola, or let me, change over to whatever, right? Like, you may do that a little bit, like when the times are hard, but when
yeah.
times become good again, you're gonna say, forget the generic brand. I'm gonna go to my tried, tested, and true Coca-Cola. I love Coca-Cola, or I love Pepsi. I love my Dr. Pepper, my root beer. Whatever it is, right?
Yeah.
Everybody's set in their ways, and they're gonna keep doing that.
Oh, awesome. I see we're already over an hour. This has been an incredible conversation we've been having here on the Passive Income Podcast. Anything else you'd like to just mention before we sign off?
Yeah, I mean, I said it a couple of times, right? I'm very grateful to the Dividend family that we have here on Twitter. The DivTwit family. It's been really awesome. Personal thanks to all of you, like, that are way higher than me in the dividend income, for
Yeah.
sharing your journey, posting your portfolio, quarterly or monthly, however you do it, keeps me in the game. People that are just starting, right? I see some posts like, oh, you got like $400 in dividend from here, and I'm like, well, the person that I'm looking up to got $5,000 in that same
Yeah.
stock for dividend, and they're like, oh, I only got 50 cents. I go, that's how I started.
Yeah, I
Right?
find some of those tweets very inspirational as well because you know what? You're like, "Hey, that," like you said, 50 cents or $1 or $2, and you're like, You've at least you got started." That's the
Yes,
first step. You gotta get on base, right? You're on
right.
base, and you're not, just get on
That,
base. The old Moneyball reference, just get
that's
on
right.
base, right? And
Just get
so,
on, but just start. Just
yeah,
just do it. Just put your mind to it. Starting is the hardest. Like, even when you want to go work out, right? Getting to the gym is the hardest part. Once you're
just
at the
get
gym, you're already working out, right?
just get
But
started.
getting out of bed and getting to the gym is the hardest part. But once you get that step out of the way, then the rest becomes easy. So just start. So really thankful to that community. I know I talked about a lot of stocks. You mentioned a lot of stocks, right? You probably have that disclaimer. We're not financial advisors. So I just want to say that. When
Yes.
somebody's saying, coming in, is, oh, Master P said this and that, so I sold all my position, or I bought, I refinanced my house and I put everything into blah 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 because Master P said it. I'm not a financial advisor. I'm nowhere near being a financial advisor. So everything I'm learning is just from this community. We're sharing with each other. I'm also thankful to the folks like yourself that do the podcast, others that come share their journey, as well as people that introduced me to new stock tickers, right? Like, they may post something
Yeah.
like, just recently I got into, I think, Energy Transfer. I didn't know anything about it, never heard about it. People posting their commercial that just came on during one of the NFL playoffs game, right? And I researched into it, and their dividend and whatnot. So it's a whole big universe out there. What you take in and what you make out of it, what you put in is what you get, right? I
Yeah, for sure.
tell my kids every day, if you study hard, you're going to get a great marks, right? What you put in is what you get out, right?
Yeah.
So same thing applies to us as well. And if we keep the focus, be consistent, I think this is a way to at least have that wonderful income in retirement that we all want, without having to worry about, will I have to be a Walmart greeter or check receipts at Costco as people are leaving in my 70s, right?
Yeah.
That's all of our goal, is to kind of avoid all that. Now, people may be doing that for fun. I've talked about it many times. I say, I'm bored and I'm just sitting around. I'm the type of guy that wants to keep working, do something. I may volunteer, and this might be good for me as well to
Yeah,
stay
maybe doing
busy.
that in your 70s, like, 1 day a week, but not depending on having to work 40 hours a week to survive,
Right.
right?
Yeah, you don't want to count on that to meet your commitments.
Awesome. I
So
definitely feel like we could have talked for
yeah.
over 2 hours on this episode of the Passive Income Podcast. If you're still watching over an hour later, please be sure to hit that subscribe button. I mean, if you're still here, those are the rules. Just hit the subscribe button, please. And yeah, also, if you would like to support the Passive Income Podcast, you can make a small donation with the Buy Me a Coffee link in the description below. And also in the description below, you will notice the not financial advice in capital letters. Awesome, Master P. Thank you
Thank you.
so much for being on this episode of the Passive Income Podcast.
No
And
problem.
I
Let's
will,
learn and grow together.
awesome. We will catch each other on Twitter.
Thank you.
Subscribe.